Business risk types and exit strategies. An entrepreneur should think through what different risks they could encounter before starting their own business. Whether those risks are natural disasters, employee conflicts, or a market meltdown, it is better to be prepared than caught unaware. In this video, I will address common risks many businesses face and offer advice on how to mitigate them. I will then conclude with various different types of exit strategies that you can have when you are ready to leave your business. When you think of human risk, you need to think of people problems. This is a big balloon of concerns, which includes any of the following: employees skipping work, workplace safety, even losing invaluable employees for a variety of reasons. If you are in retail, another major concern that you'll have is that 80% of all thefts will actually come from your staff, not customers. To mitigate these situations, the owner should consider a number of options. When it comes to workplace safety, health and safety training for the employees will help address concerns that come up at work to keep people safe. Employee assistance programs can be integrated to help employees out who are going through rough times in life. These programs help boost morale, bring togetherness in your business, and likely will minimize absenteeism and theft. Finally, having a solid recruitment policy in place will help minimize the loss of employees leaving the company. When you think of natural risks, think of weather. Discover whether the types of natural risks in your area are insurable or are uninsurable. For example, in Colorado, most insurance companies do not include flood insurance since the state is basically a desert with minimal flooding. And yet in 2013, we had a severe flood hit the state. It wiped out countless numbers of homes, businesses, and even infrastructure. Some states have hail, some have tornadoes, some have earthquakes. All I'm saying is, assess for yourself what is in your business's best interest. Economic risks have a lot to do with money and politics. Many factors affect the economy and people's ability to spend money. Examples of this include the unemployment rate, current interest rates or tax rates, and whether or not the country is in a recession. As stated earlier, some of these economic risks could also be political. Your country could be at war. Trade embargoes or high import tariffs could be assigned to your goods if your products are made overseas. As these types of risks are at times difficult to forecast and prevent, the best strategy is to cut costs or to diversify your client base as much as possible. When it comes to business, you can also categorize risks as being a pure risk or a speculative risk. With a pure risk, you basically have two outcomes. Either nothing's going to happen or bad stuff will happen. Let me give you an example. You're going to park your car on the street. You hope nothing will happen, but it could get stolen, hail could damage it, and so on. A speculative risk, on the other hand, gives you the possibility of something good may be happening. So, for example, in this situation, imagine you letting your best friend borrow your car. Maybe she borrows it and nothing happens. Maybe she gets in a wreck. But maybe she also fills up your gas tank for you as a way of saying thank you. Or maybe she takes your annoying sister to the airport so that you don't have to. Another way to categorize risks is to determine if it is a controlled or an uncontrolled risk. You may not have a garage or a driveway to park your car. So in that case, parking on the street is your only option, and therefore you are putting your car in an uncontrolled risk. However, you can still choose to allow or not allow your best friend to borrow your car, or a different person for that matter. And in these cases, these are different controlled risks. Finally, when assessing risks, you should also come up with an exit strategy for when you plan on leaving the business. Now, you might assume that your only exit strategy would be needed when you're basically going to fail, But sometimes people just want to leave the business because they want to pursue something else. So here are some strategies on how to leave your business, no matter how well or not well your business is doing. Exit strategy 1, you don't leave. Maybe things are just fine. You decide not to grow at all and you want to keep everything the way things are. You've read enough about mega corporations and you, quite frankly, don't want that hassle. As your business makes more money, you just take extra income. You'll also have to pay extra taxes. You're the owner. You're allowed to do this. And this strategy is known as running a lifestyle company. I have even read about a guy that basically is making $5 million a year and working 30 hours a week. He stated very simply, why would I want to change and why would I want to leave? Things are working out. I'll just keep going and taking big paychecks as time goes on. Your second business exit strategy is liquidation. You can sell all of the property and the assets inside, pay off all of your creditors, and walk away. It's very easy to do and requires very little paperwork. But you're going to have that nagging feeling that you threw away something really good, or you ended up wasting a lot of money by being so hasty getting rid of your business. Another option is to sell your business to a friendly buyer. This is a common strategy with family businesses. The great part about this exit strategy is if you have built up a good reputation, you can keep it going in trusted hands. But a common misstep in this exit strategy is that you usually end up selling the business cheaper than what you could get for it in other ways. On top of that, if the person you sell it to doesn't really know what they're doing and they're buying a business because they're emotional about it, they might end up running that business into the ground by mismanagement. The final exit strategy that I'll be talking about is acquisition. You may be approached by another business who wants to buy yours. This is a very common exit strategy, especially if your business is doing well. Disney bought Pixar and Marvel. Google bought Android. Heinz Ketchup bought Kraft Cheese. Locally in Colorado just this past year, Chevron bought Noble Energy. Sunrun acquired Vivint Solar, and Sunflower Bank purchased Scottsdale Wealth Management Group. If your business is ever in this type of situation, you have a good chance of being purchased for far more than you could ever ask for. But once that merger happens, there will likely be a clash between the existing employees and those of the other company. In addition, deals on this level may have strings attached that could be somewhat unbearable and ridiculous. A common example would be that you're not allowed to start a business or compete with the purchaser's business in any way for the next 18 months. Whether you have a problem with employee morale or you've dealt with hail damage on your roof, it is important to plan ahead for the many risks that you will face when starting your business. It's also equally important to have an exit strategy in place when you want to call it quits. I hope this information has been helpful to you in your planning. Good luck to you.